Welcome everyone. We finally back to another interview of Changing the Game. So I have been away for a while, so happy to be back. And today I'm very happy to have Cheryl Mack with us. So as you're gonna see, I believe that Cheryl embodies the essence of changing the game. So the people that actually, are not staying still, so it's going after, the dreams and in a mission to change things in community, change things in what they're doing. This season is about innovation. So we're talking with investors and founders. So here we go about Cheryl, right? Cheryl is the CEO of Aussie Angels. She's on a mission to democratize angel investing in Australia and New Zealand. She's an active angel investor with more than 20 investments and a venture partner at Black Nova VC. She leads an angel syndicate with over 130 investors. She is a strategic advisor for several startups, and in her spare time, she mentors for programs like StartMate and Founder Institute. I like the spare time. A community builder at heart, Cheryl recently held leadership roles in Stone & Chalk and the Australian Computer Society. Before that, she was the CEO of StarCon for 4 years and created an APAC-wide pitch for a $1 million competition. In case that's not fun enough, Cheryl is also regularly featured on Startup Daily as the pitch doctor. Welcome, Cheryl.
Thank you so much for having me.
I'm having fun already. So,
oh, good.
Cheryl, normally the first question is quite standard. So tell us a little bit more about yourself. So obviously, I just read your bio. And what is that story that goes a little bit beyond the bio? And who is Cheryl?
Yeah, so I guess like my story started many years ago. You may notice that I don't sound Australian. I'm originally from Canada. I moved to Australia about 7 years ago. And when I got here, I started working for a company called freelancer.com. And through that role, I had a chance to build a company called StartCon. And StartCon was a pretty cool opportunity. I was able to bring founders, investors, and corporates together from all over Australia and eventually all over APAC as well. And that was also where I started to get really interested in how to help founders connect with the right money if and when they needed it. Because we had about 600 startups that went through the pitch competition each year. We also had about 500 investors on our list that came to our events. But it turns out if you put 1,000 people in a room together and hope they just connect with the right people, that doesn't really work out. So I started to work on the problem of, well, how do I connect the right people to the right people? And I am, I get called a super connector often because I do like making those connections. And I really do like creating value within my network. And so I've spent a lot of time building up a really strong network of people around me that can support each other.
That's cool. So are you talking about coming to Australia 7 years ago?
Yeah.
So I do remember that I founded our company here in Australia 10 years ago. And at that point in time, going after that innovation ecosystem stakeholders and looking at, what was available, the incubators, the accelerators, and etc. So I wasn't too impressed with what I saw. So, 10 years ago, I think what we went through in the 10 years is quite significant, I guess. So
100%.
Obviously I am in Western Australia. So Western Australia tends to be a little bit behind from where you are. I think you are in Sydney, right?
Yes, I moved to Sydney. And you're absolutely right. Even 7 years ago, the ecosystem was very nascent. Coming from North America, I was used to a lot more resources, a lot more just activity in the startup space. I think I remember when I first landed in Australia, I reached out to every startup person, every incubator, accelerator program. And I think I covered the whole ecosystem in Sydney within like a couple weeks. And someone and was like, oh, wow, you've only been here like a month and you already know everyone. I was like, yeah, I just reached out and booked meetings with people. And to everyone's credit, they were super happy. Like everybody was open to chat with me. I'm this foreigner that lands in Australia. I'm like, hey, like, can we go to a meeting? Murray at UTS, or actually was at Fishburne's at the time, was happy to sit down with me. So like the ecosystem was pretty open, but it was very, very small. And you're 100% right. Like the level at which we've grown, even just in the time that I've been here, has been incredible. And we are scaling faster than a lot of our overseas counterparts. And I think that that's going to do us well in the next 5 to 10 years as well.
Yeah, I agree with that. So, sure, maybe the first question is, what is your background? Did you went to university? Did you go to university back in Canada? So what is that?
I did.
Your degree background?
Yes, I did. I went to the University of British Columbia in Vancouver. I studied business with a major in marketing. And don't ask me to tell you any of my marketing things that I learned, because I immediately went to work at startups and started doing something called marketing automation when that wasn't really a term. I just didn't want to do things that were repetitive. So I worked myself out of a job and then went on to the next thing. So yeah, I did go to university. But I wouldn't say that I am exactly applying those specific marketing skills that I learned there. You know what I did learn at university, which I highly recommend people go? I learned how to socialize, and I learned how to network, and I learned how to work with difficult people.
So maybe the next question is about that. So you can see easily, your energy, your willingness to connect to people. So where does that come from? Was that always natural for you?
Yeah, I think I've always been like the biggest extrovert. Like I get told regularly by people that I am the biggest extrovert they know. I get my energy from people. I hate being alone. I love being out with my friends or startup people, having some beers or a wine. And so I'm just like naturally always out there connecting with people.
Very nice. You normally for people that are looking for do what we do in this space of ecosystem. So in that sort of capital, the social capital and that ability to connect to people. So we can speak lower of the relevance of that. So it's interesting to see that for you that comes naturally. So my story is a big story of I've struggled to actually get comfortable with people, but having said that, I agree with you. When I think about what gives me energy today is all about those connections.
Yeah, and I think also like in investing in general, like investing is a team sport, and it does take a level of being able to make friends with people, so that when they're investing in something cool, they tell you about it and they refer that person to you. So it definitely takes a level of making sure that you can be out there and be friends with people.
Yeah, no, very cool. Cheryl, I'll take some risk here and I'll make a comment, right? So I hope it doesn't make either you or myself uncomfortable. So it doesn't fit the profile of investors. You look like you what, young woman, and normally when I talk to investors, I'm more older men. Full stop.
Yeah, old men with slightly lighter hair color, right?
That's right. So what about that? So was that ever a barrier, or how you frame yourself as an investor? With a new sort of generation profile. How is that for you?
Yeah, definitely. Like I actually get this question a lot. Like when I talk about angel investing quite a bit, and I'm definitely a new generation of angel investor. I've only been investing for 4 years. So like, I don't have any big exits yet or anything exciting that I can point to and be like, hey, this means I'm a good investor, but I have deployed capital. I have deployed arguably a lot of it. And I get this question a lot. Like when I speak about angel investing, like at least someone in the audience is like, in some way, shape or form, usually like the more timid ones are like, so like, your career seems like you haven't gotten too far through it and you're already angel investing. Like, what's up with that? Or other people are just like, hey, you're young, you're a female. Like, how are you an angel investor? So it's like some degree of that question. Look, the reality is that like, I kind of fell into it. I didn't necessarily set out to become an angel investor when I first started. It was more that I was advising a couple startups, and one of them was just closing around and they had like 20K left. And I was like, I could do that. And then that happened again. But once I did decide to be an angel investor, I set out to do it properly. Like when I talked to a couple investors who, I told them what had happened and that I'd invested a couple companies, wasn't sure what I was doing, like, tell me what's up. They said, well, you could stop now and you'll definitely lose that money that you've invested, but you won't lose any more. Or option B is you can continue. You'll probably still lose the money that you've invested in those two companies, but you might have a chance at making it all back and then some on the next 1 or 2 or 10 if you do another 10 companies. And I chose option B, and I went hard. And once I decided to do it, I just was like, well, I'm going to be an angel investor. But you know what? The interesting thing is, I did not share that publicly anywhere until about a year in. And it took a mail saying, Cheryl, you've written 10 checks. Like, you're an angel investor. Why aren't you like change your, like, I think he took my phone and like changed my Twitter on the spot to angel investor in 10 companies and counting. And then I was like, yeah, this is dumb. Like, I'm not a fraud here. I'm deploying capital and I am an angel. Why shouldn't I tell people that publicly?
Interesting. That's good. It's interesting how the journey is to adopt that identity and to recognize it. So look, the way I met Cheryl was when I was in a search for a product. So in the angel investing community, there's a product in the US called Angel List, which is pretty well known, and that's where we have access to deals and etc. So, and I was told that Cheryl was doing something similar here in Australia. So that I assume that that's what Aussie Angels is. So do you wanna let us know what is Aussie Angels?
Yeah, so Aussie Angels is a place where angels can co-invest in the most seamless and fun way possible. For angels who are looking for great deal flow, they can follow lead investors who are already investing in companies that they love and are sharing their deal flow with others. So you can join what's called a syndicate. And there's no commitment to invest or like minimum requirement or cost to join. But what it means is that you're joining a syndicate of people that are co-investing together with a lead investor, someone who finds the company, does the DD, writes up the notes on why they're investing and shares that with the members of their syndicate. And then those members can decide if they want to put their check in alongside that person's or not. And I run my own. I've got about actually 150 investors who are part of my syndicate who look at the deals that I'm investing in, and it's always investor led. So I never put forward a deal that I'm not investing in. It's always, I've decided to invest in this company. I've gone out and built the relationship with the founder, found this person, convinced them to let me come onto their cap table, and written up the notes on why I'm investing and given that to people so that they can decide if they want to invest. Now, on the other side of things, if you are someone who wants to start an angel syndicate, and this is where you are coming from, Wilson, if you're looking to start an angel syndicate and lead your own syndicate, the options in Australia, I looked at them and I was like, this sucks. It costs $50,000 to $100,000 to set up an angel syndicate, and a lot of time and effort and a lot of admin and a lot of the boring, tedious, teeth pulling stuff that nobody likes to do, right? Like, nobody likes herding cats and convincing or chasing investors for their money or their signatures or all of that stuff. And nobody likes dealing with compliance stuff. So ironically, I set out to find a solution that would enable me to do the fun parts of running a syndicate, which is find founders, build relationships with investors. And because I couldn't find a good solution, I decided to build it myself. And now I do all of the boring stuff for everyone else, including myself. So I actually made it worse for myself, but I'm enabling a lot of other people to run their own syndicates. And I think that's the important part.
Very nice. Very nice. Well done. So maybe a question there for the listeners that are not completely familiar with what we're talking about. So there are when you're investing, so there are lots of different options for you to invest in the terminology that we use. There are different asset classes, right? So you can invest in public stocks. You can invest in more bank securities, and then you have these startups and early stage investment as we talk about. So in this terminology as well, when we talk about angel investors, so angel investors are originally so people that are not interested to only deploy capital. They're interested somehow get involved, get connect, and provide some help. So question for you is when you're doing your angel investing, is that how you perceive as well? So do you go beyond capital to help with that sort of smart money? And if yes, so can you give us examples of how you help the startups to come along?
Yeah, absolutely. So yes, I would call myself smart money, although, that feels a little bit like I'm bragging, but so the way that I pitch this to founders, actually, I'll start with before I ran an angel syndicate. When I first started investing in the first couple of years, my check sizes were small. And so my only choice, like if you're walking into a startup and say, hey, I want to drop $50,000 or $100,000 into your startup, you can be dumb money. You can drop that money in and go off to Bermuda. Like, generally it's like, great, especially at the early stages, maybe when they're raising 20 mil plus, not so much, but like at the early stages, if you're dropping more than 50,000, generally it's a yes, because founders like your money, and they're excited about someone who's backing their company at those early stages. My check size was small. And so I often had to talk my way onto cap tables and convince founders that I was valuable and that they should take my money, because taking my money meant that they got access to me. And in the first couple of years, that wasn't as easy as it is now. Like now I get founders being like, we'll take whatever you give us. Like, we just want you, which is pretty freaking cool, if I'm totally honest. But at the start, it was very much like, here's how I can help. I can be really useful in these ways. And those ways were essentially a couple of things. One, my background is in marketing, and through my work with StartCon, building that company, and a number of other things, and working with as an advisor for other founders, like I'm fairly good at building like B2B sales funnels. So if you're looking to build like your B2B inbound marketing, I can help with that. To the point where like I can jump in and like help make sure your HubSpot workflows are set up correctly, or I can just give advice from the sidelines or test stuff out. So I can be really helpful there. The other aspect that I can be super helpful is also through like when I was working at StartCon, Stone and Shock, ACS, I've built a really huge network. Like my personal CRM, just my personal one, not anything to do with work. My personal CRM is over 10,000 people. And what that means that it is if a founder is looking to connect with someone, I usually know someone, or I usually know that someone personally, or I know someone who knows that someone personally. And so I can make connections that can be really, really useful, and I can open doors. And then the last one is if they're planning to go to the VC backed route, like I have built really good relationships with a lot of the VCs in Australia, not so much overseas, but if they're looking for, helping them step up to the next stage of funding, then I can at least open doors and help them get a pitch to one of the people at the fund. So that's the ways that I was and still am very helpful to founders personally. The cool thing about running an angel syndicate now, so kind of fast forwarding to now, is because I bring all of these other people in on the deal with me, not only does the founder get access to me, but they get access to all of the angels who invest in their round in the deal with me. And so it's like they get access to a whole heap of really helpful angels without any of the admin, because I handle all the admin. They only have one line on their cap table, but they can go, hey, Cheryl, I'm looking for this. And I go, awesome. Like, that's not my area of expertise. I don't know anything about, consumer marketing, but I do have someone in the syndicate and they would love to help you with that. So I'm awesome. Even more valuable now.
Yeah. Now that's look, I have to say again, the way the self-confidence that you mirror, and the way you come with assurance of the capabilities that you bring along, that's it. Well, I think you might have a good idea of how valuable that is. That's pretty good. So
I mean, I hope so, but at the same
yeah.
time, like there's still a level of like, am I just totally like, imposter syndrome? Like, am I just totally bullshitting here? Or is this, don't worry. I'm not like the most confident person in the world, but.
So there is one thing that you emphasizes a lot as well. So, and you embodies it. So sometimes I try to chat with people and talk about the importance of the way I frame is social capital. And when really, because people talk a lot about networking, and while networking is is extremely important, and you need that to do business, you need that for your social life. So when that becomes social capital is where that network that you have really has value to connect people, to create opportunities, to and you embody that concept of the social capital quite well. So it's very nice to hear.
Thank you.
In what you just mentioned, I'm curious about something else that sometimes is uncomfortable as well. So you talk about small checks and big checks, and talking that say doesn't really get to know what is small, what is not small. So and one thing that I have big interest as well, so, and I think people listening to us will have, is this early stage investment in Australia is regulated. We have this concept of the sophisticated investor. So to be a sophisticated investor, you need to meet some asset criteria, some, have annual earnings at a certain level, or hold assets at a certain amount. So it doesn't give access to everyone. So some people probably not eligible to do this. And then you also have that barrier of, I don't have 50K to invest, I may have 5. So would you have your own flavor and comment about that? First, that sort of regulation part, talk about the access to it, the sophisticated investor thing, and then the check sizes to provide access to people.
Yeah, absolutely. So I'll address the check sizes first, because I'm one of those people that I don't mind talking specifics about money. When I first started, my check size was $10K. $10,000 was the amount that I put into each startup for the first 10 deals. And I was pretty specific about that. After the first two were a little bit more because I didn't know what I was doing. But so 10K, and 10K is less than half the typical minimum check size of a founder's first or second raise. So typically founders, when they're doing their angel round or their pre-seed round, minimum check sizes at the minimum are $25,000. Some of them will have a $50,000 minimum, but the minimum you're usually looking at is $25,000. So my check size being less than half that made it more difficult for me to convince founders to take my money. Anything less than that, probably you'd have to be super valuable. And there are people way more valuable than me that get in with much less than $10,000, but I'm just saying I struggled in the early days. That's when I say a small check. I say $10,000 is a small check because it's less than half of the minimum that startups typically want at that stage. Now, in terms of access, and also I will comment that is going directly. That's actually investing directly to get on the cap table, which is the capitalization table of the startup, their company registry, essentially. When I first started 4 years ago, there weren't too many other options to invest less than the $25,000 minimum. So there's Virtual and Equitize. So those are retail equity crowdfunding platforms, and those are open to everyone. And you can invest, I think, as low as $250, which is pretty cool. And then there are also syndicates. And I think at the time when I started, there was maybe 2 or 3. I think there was 1013 Gelix and Eleanor Venture at the time, which is now Flying Fox. But most of those had a like 1013's minimum is 10,000 USD usually. At the time, Gelix's was 10, and Flying Fox was usually 5,000, which meant that you could get in. However, through syndicates, those are typically reserved for wholesale investors. Now, there's 3 ways you can be a wholesale investor, but most people qualify as the sophisticated investor test. And that is 2 ways. One is having an income each year for the previous 2 years of $250,000 or more, or having more than 2.5 million in assets. That gets you a sophisticated investor, which classifies you as a wholesale investor. I did not meet that. And so that meant that investing through syndicates was off limits to me at the time. There are, I think, things and conversations in the works to potentially create a new path to wholesale status through education and or codifying the third one. So there's the sophisticated path. There's professional, which is really for like people who manage funds. And the last one is the experienced. So there are conversations happening in the market and the public right now that are talking about hopefully codifying that last one, which will allow people who want access to this asset class to be able to do so through an education path, which is something that I strongly believe in.
Cool, very nice. So we have been talking about that a lot in terms of providing other paths for people to become investors in the early stage. So there's for me there are 2 things there. One is for the early stage startups to have access to more capital, right? So the other thing as well is that is a big contradiction. Sometimes we talk about the parody that I use is this. So investment houses need, you need to be a wholesale investor to join as an investor, because it make you have the credentials to be able to do that. And the analyst that's doing some of the DD sometimes themselves are the one qualifying the deal, and then themselves they don't qualify as sophisticated investors and cannot invest in the deals. So, which is quite ironic, right? So it's you providing advice sometimes and you're not being able to do it yourself. So that needs to be essentially corrected, I guess.
Correct. So, yes.
Cheryl, I think I will bother you for us to have another one of these. So we get into the 30 minutes and we didn't even start it. So
very happy to do another one, Wilson.
Yeah. Look, in that sort of space, so it's interesting that you mentioned that you didn't qualify as a sophisticated investor when you started. So then the question I would ask you is, I'm sure that there will be people listen to this that are in that sort of situation. They would love to be more active in this space, but they don't qualify as a sophisticated investor. So do you have like those, small, top 1 or 2 tips for people to start their journey when that's the case?
Yeah, absolutely. So retail platforms. So if you're not a wholesale investor, you're considered a retail investor. So retail equity crowdfunding platforms like Virtual Equitize, Venture Crowd, I'm probably missing a couple. Those are good options for retail investors to just kind of dip their toes in the water and be able to invest, $500 there, 500 here and there. If you're really, really passionate about wanting to invest in this asset class, being early stage startups, you can go the path that I went, which is you do not have to be a sophisticated investor or wholesale investor to invest directly into a company. Private companies can raise up to $2 million from retail investors in a 12-month period, which means that they will take your check. And I slogged it out, and I convinced founders that I was valuable and that they should take my check, even though it was small. If you have larger checks and, even though you don't qualify with the net assets or income, but you want to you for some reason have lots of money and want to put bigger checks, then that is easier to do, because convincing founders to take more money is easier than convincing founders to take less money. But you can absolutely take the path that I did. And for the first 2 years, I that's what I did. I convinced founders to take my small checks. But I would say that is a commitment, because you don't want to just do 2 and then stop. You need to do 10, ideally 20. At least 20 in your kind of investing lifetime. So you want to make sure that you do have enough to cover that kind of diversity if you're going directly, and not just enough money, but also enough time. I can tell you right now, like, angel investing can be a full-time job. And when I first started, like, I had to look at a lot of companies. I'd talk to a lot of founders. I had to do a lot of research. So it's not just make sure you have enough money, but make sure you have enough time to allocate to do this. It is a big endeavor. It's also risky. So I would just encourage you to think about, like, are you just trying to find the next Facebook because you want to get in on the next Facebook and you just want to find it, invest, and walk away? Because that's not going to work. It really needs to be like a passion, labor of passion, I think is the term. And really doing it for other reasons than just wanting to get rich, because I assure you there are better and easier ways to get rich than to find the next Facebook.
Very nice. I like your expression, labor of passion.
Yeah.
So everyone, this is Cheryl. Short conversation, but I'm completely fascinated by it. So it makes me want to know more about what you do, Cheryl. I'm very humble and grateful that you sharing your stories with us. Thank you very much.
No problem at all. And if anyone is interested in joining my syndicate, even if you aren't considered a wholesale investor, I encourage you to come sign up. I constantly share things anyway, and we can keep in touch. And if things change, I can still help you through that journey. So I would encourage you to come to aussieangels.com/syndicates and register for any of the syndicates, including mine, that resonate with you.
Very nice. Thank you, everyone, for listening. I'll see you again in the next interview of Changing the Game. Cheers.
Thanks.